Hi everyone, welcome back to my GBPUSD market analysis as we prepare for the new week. In the last 2 weeks, the British pound has struggled to break through that descending trend line we identified on the daily time frame. Remember, we've had this trend line marked out after connecting the series of lower highs since last year, July. And of course, we saw how in the last couple of weeks, this area was met with a struggle between buyers and sellers, and not until last week we finally saw the British pound being outperformed by the US dollar on Friday following impressive labor market data for the month of May, resulting in that technical breakdown of the trend line and bringing price back into the seller's territory. The current up US NFP report indicates a strong labor market, leading to a sharp decline in the Fed's interest rate cut expectation. In my own assessment, the momentum appears to have swung in favor of sellers, at least in the short term, especially after considering the robust US labor sector. Now, looking ahead into the coming week, the pound sterling's direction will be largely influenced by the United Kingdom's employment data. Recall that in the number of employed people in the United Kingdom has declined for 3 consecutive months, and any indication of further layoffs would likely hurt the pound sterling, potentially amplifying speculations for early interest rate cuts by the Bank of England. In this video, we will be analyzing the GBPUSD market dynamic from both technical and fundamental standpoints, leveraging tools such as the economic calendar, trend lines, key levels, and chart patterns to anticipate potential price movement in the coming week. Before delving into the specifics, a gentle reminder: while we are here to learn and explore, please note that this presentation is basically designed for educational purposes only. Forex trading carries its own inherent risks, so I encourage you to tread carefully and seek advice from a professional financial advisor before making any investment decisions. So, with that being said, here, let's dive right into the business. So, I will be going back into the daily time frame together. So, the structure we have here has remained the same in the last couple of weeks as we continue to monitor price action between the 1.2800 level and the 1.2700 area. I think we've been doing this for the last 3 weeks or so. And one of the main things we observed on the daily time frame is the fact that since July of last year, price action, though has shown signs of selling pressure, as buyers have been finding it difficult to find new highs. And as a result of the series of lower highs, we have this beautiful descending trend line to work with. And in addition to this descending trend line is our key level for this week, which I situated at the 1.275. Remember, the last couple of weeks we have been using the 1.27 area, but with the recent change in market dynamics, I was able to spot this 1.275, which will be playing a significant role in guiding our trading decisions for next week. Now, a quick reminder here: our key levels usually serve as a yardstick to guide our trading activities for every week. So, what this simply means is that when price stays below our key level, we want to be looking out for patterns and structures that support the idea of selling, and we are not going to be buying unless price action climbs back above our key level. Now, zooming into what has been going on here in the last 2 to 3 weeks, you will see that we are at a crucial juncture where price action has been trading within an important confluence between that key level at the 1.275 and that descending trend line. Now, the question as we head into the new week is, will selling pressure continue below the 1.275 like it has always done in the past to incite a sell off, maybe into this ascending trend line, which when I looked at it earlier, will be dovetailing to about 300 pips move at least if price gets into the trend line. And in fact, it could be much more if we see a breakdown of that this ascending trend line. Then the other perspective we are going to be taking into consideration is the possibilities of the buyers as well. And for us to consider any buying around this area, we will need price action to climb back above both the descending trend line, that is breaching the trend line, and of course the key level at the 1.275 to feel comfortable buying this asset. Now, how are we going to be navigating this current market dynamic in the coming week? How are we going to be buying? How are we going to be selling? And what is the structures that we are going to be using to help us navigate this current structure? Well, I have a simple trading setup on the 4 hours time frame, which we are going to be looking at together. But before we go into the 4 hours time frame, it's very important of us to keep tabs with the fundamental factors that is likely going to be influencing the sentiment around this confluence. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us some information and, most importantly, timing to position ourselves for the next move. Now, based on the asset we are looking at the moment, we are going to be focusing on high impactful event from both the United States and the United Kingdom economic docket. Now, on the economic calendar here, the first high impactful event is going to be coming in from the United Kingdom on Tuesday, June 11th, and that is the climate count change. Now, for the climate count change, for those who don't know, this data here refers to the net change in the number of individuals claiming unemployment related benefits in the last 30 days. Now, this metric is going to be offering us insights into the current state of unemployment in the United Kingdom. Then we also have the employment change data, which will also be coming up simultaneously. And this refers to the net change in the number of employed personnel in the United Kingdom. Then at the same time, we are going to be looking at the International Labour Organization unemployment rate, that is the ILO, and this, of course, will also be giving us an insight into the measure of unemployment, encompassing individuals actively seeking employment and those available for work but not actively seeking. Then, fast forward to Wednesday, we are going to be looking at another bunch of high impactful events from the United States. And one of them here, one of the major highlights for the week is the Consumer Price Index, which measures and examines the average change in prices paid by consumer for goods and services in the last 1 month. Then we're also going to be looking at another impactful event, that is the federal interest rate decisions, where the outcome of the Federal Reserve meeting um, will be giving us an insight into whether or not they have decided to change or maintain the current interest rate. Then we have the monetary policy report. We also have the FOMC press conference, an event where the Fed chairman will communicate the central bank's monetary policy decisions, economic outlook, and of course, answer questions from the media. Then on Thursday, June 13th, we are looking at the Producer Price Index, a data that measures the average change over time in the selling prices received by domestic producers, excluding the volatile food and energy sectors. And lastly on this list is the publication from the University of Michigan on Friday, June 14th, and that is the Consumer Sentiment Index. This data gauges the prevailing sentiment in the US economy and, of course, gives us an insight into the confidence level among consumers, hereby providing us with an insight into potential shifts in economic conditions. So these are the high impactful events that we will be looking forward to next week for the GBPUSD. And of course, we all know that the anticipation of this event usually has its way of influencing the sentiment in the market, which obviously will reflect on the chart as price action. Now, talking about price action, we scale down into the 4 hours time frame where I have a simple setup to guide our trading decisions for next week. Now, on the 4 hours time frame, after considering the character of price action since the last week of the month of April, it is quite obvious that the market has been on a strong bullish momentum. And as you will see here, we have an ascending trend line to buttress the strength of these buyers. Now, you would notice that in the last close to about 8 weeks now, you will see that at no point in time has price action broken down this ascending trend line, which for me is a good signal that buyers are very strong in this market. However, if you look at what happened following the US NFP data on Friday, it appears we have a little bit of breakdown of that ascending trend line with two candles. Now, this whole situation here is happening just right below our key level at the 1.275. Now, you know how we use our key level. When price remains below the key level, we want to be looking out for selling opportunities. Now, with the situation we have here, we will continue to look out for selling pressure below both the key level and that ascending trend line. And if price continue to stay below this ascending trend line, then this will be a good signal for us to join selling opportunities. However, if price action climbs back above the 1.275, price will be back above that ascending trend line. And if we identify buy pressure above the structure on our lower time frame, it will be good opportunities for us to buy, and then we can maximize the potential of that bullish move by adding more positions at the breakout of the 1.27150, which happens to be the resistant line of this range bound structure we have seen here in the last couple of weeks. So, our center of focus for this week is going to be around both the ascending trend line and that key level, where depending on how market participants react to the structure at the beginning of the week will determine what our next line of action will be. Trust me, I will be with you in the comment section of this video on Monday morning after monitoring how market participants react to the structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.